Hello, today is March 7th, 2023, and it is, what is it, Tuesday, and we're going to go over the markets. There's about 45 minutes left in the trading session. So starting off, we're going to start off actually today with the Dow Jones rather than the typical S&P 500. And the reason why is this was the big one that I was talking about from last Friday when I was looking for a big decline back down to this level, right down here, just based upon the daily type of trade that we're looking for it. And so what happens is the other week, if we use the low from that day to the high of that day, right there, we can see price went up, hit the 1.146, didn't retrace back enough to make it complete, hit the 1.414, didn't come back and hit this, and then just straight took off from there. It looked like it was going to, but didn't get quite close enough to fill it in right there, and then just kept on taking off. And so then I think, what day was that? That was Thursday, yeah. So then we had Friday, and the thing just straight blew up over here and kept on going up. And then one thing that I was looking for on Monday was for it to go slightly a little bit higher, because usually after you have one of these blowout days right here, typically or a lot of times the next day you'll get a little bit higher and then you get the sell-off. Obviously that didn't happen. It took one more day right up here for that to happen, and then we finally had the sell-off for it. So price went up, kept going up from this day when I was looking for more of a sell-off on Monday, but had to wait an extra day, and then today the price came back. And as we've seen from last week's video, sometimes it can take even longer than a couple days. I think it was the Russell 2000 or one of them. It took almost 5 days once it hit the real oversold territory for it to finally sell off. And one of the things that we're looking for previously was, as you can see, the MFI in the 4-hour chart right here was completely overbought right here, going up in this area, stayed up there for a while until we finally had the big sell-off today. And the reason why is the Fed was speaking about having to be even more aggressive with interest rates, and the market obviously did not like that, and so then we had the sell-off back down to this level that we're looking for. So this one is complete right here. This one is over, and so what we'll do is take that off of here and look and see if there's anything else. Now, it's not going to be a blowout down the other way, just because, let me show you if I can grip it correctly. There's right there and to right there. Because as you can see, using the previous day's high and low right there, price came back down. It looked like it was going to be a blowout when it hit the 1.146 right here, hit the 1.414. In fact, closed right on it. It looked like it was going to keep on going down lower, but then we had a big pop right up here at 920 and came up into the 1.146 to complete that trade. So unfortunately, it's not going to be a blowout trade for it. But what we do have, hold on, do we have it or not? We could have a retracement trade. Is there one or not? Nope, it's not. It came back into 38%. So nothing going on right here, for at least for right there, because of this big area where we had some buying before the market continued to sell off again. We could have potential one right here using the green semaphore as a retracement trade, but for me to get into it, price would have to continue to do it on a whole lot lower, down to at least there, but more likely down to the 6.85 before I would consider getting down into it. So that's really the only thing left here for the Dow Jones. And yeah, today has just been a huge move down. As you can see, it's 1.62% at the time, but it did complete that trade step that we're looking for, so that one is done. So now what we're going to do for the Dow Jones is just sit here and wait for the next one to see what's going to show. So, and then for the S&P 500 right here, you can see there's two things we're looking for actually. One was this 5-way L8 move starting down here, 1, 2, 3, 4, 3, 4, 5, all the way up there. So when price came back down and hit the 38% line, which is right there, that is the X for that one we're looking for. So that 5-wave L8 move is done. Then we had another blowout trade as well that we're looking for, coming back here from that day, which was last Thursday as well. This price hit the 1.146 and then 1.44. And hit that. And the next day that we were looking for it was price to go slightly higher for it. So if we use the lower low to higher high, we're looking for, because what we've seen is after you have a blowout day, typically the next day the price will continue in that same direction for a time, and maybe even 2 days, but we usually will see a price pop up higher, and the opposite way, if it's going lower, we'll see price continue to go lower before we have that retracement. And so that's exactly what happened. There's the anchor day, here's the blowout day right here, then we have the next day where we still have that continuation higher before we had the sell-off right there. And so the target line we're looking for was back down right here, that level, and you can see price came down, hit off it perfectly, and completed that trade as well. So that's why when I'm looking for this trade right here for the blowout trade, I wait for that day's blowout trade to confirm, and then the next day I look to get in, usually around the 1.146 level. Sometimes, price didn't come up and always hit the 1.146 level, but it seems to be a good safe spot that gets you better risk reward entry to get in. And if your exit is all the way down over here, you're going to have some good profit for it, and it just gets you in a little bit better. But there is sometimes price will barely tick up and then take off and you miss it, but it is what it is. But that's the way I like to do it. And so we can take that one off of there. That one is done. What we can do and see, let me show you how I draw the 5-wave Elliott moves. And unfortunately for the 5-wave Elliott moves, I just haven't found a good way to understand when the turning point is going to be. I've tried doing it off of different Fibonacci levels and stuff like that, looking for it, but you just never know. Like if you use the 0 to 1 point right here, the price came very close to hitting the 11.89. It did not hit. If you use like the 3 and 4 level right there, just to look for like a turning point for it. Price again came up very close to 11.89, but it didn't. So it shows me where we are in the wave cycle. It's just I haven't found a place where I'm looking to, or a safe enough place where I'm looking to get in and short it and reverse it going long. But if we are looking for this over here, so what we do is we just start with the high right here, and we just wait for the pullback up to the 38% line. Let me enlarge this here a little bit. And so here we have the first one right there. There's 0, 1, 2. And then what I like to do is draw a line right there. And what that signifies is price cannot come above that black line right there, because then that would violate one of the main Fibonacci principles, is that the price of wave 0, 1, 2, 3 cannot penetrate wave 1 right up there. So then all we do is we keep on drawing the Fibonacci level lower using the second point, looking for the 38% line to get hit, and there got hit. So now we just wait for price to see if it's going to stay below the black line right here, and for it to go down lower. And so there we have it right there. So we do have set up the 5-wave move, 0, 1, 2, 3, and let's see what the highest point is of this move right here, right there, 4. And so then how we get the final move is we use the retracement from the second level right here, the second point right there. Let me delete the black line, and let's see if I can grab the Fibonacci. There we go. And we just look for the retracement back to the 38% line. So when that happens, that means the 5-wave move is done, and there we go. Look at that. Barely ticked it right there, but good enough. And so that way 5-wave move is done right there. And again, if I wish I knew that this would be a great buying opportunity right down here, would have bought, held it up to the 38% line. But like I said a little bit earlier, I just haven't figured out a good enough plan in how to determine where the turning point is going to be for that 5th wave move right there. And so then what we can just do is we can continue taking this down right here. Let's see here. Okay, that hit the 38, but then you have this one coming up here, so that's not going to be it because it goes down, it goes higher and higher. So you have to keep on drawing it down until it hits a 38. There we go. So that would be the first one, because that higher high came in right there, higher than these. And the reason why that didn't work is if I use that one, okay, that does hit the 38. There we go. But price comes down, violates it going into the first wave, so we can't have that. So we have to keep on drawing it down till it doesn't go into the first wave, or it creates a new low with a high, and that's what we have right there. So there you go, 0, 1, 2, and we'll just draw the black line right there to signify that's the level it can't go past. And then we'll draw the second one, looking for the retracement back up to the 38. So if this low stays, the price comes and hits 38 without going past the black line, which also happens to be the 50% line, and goes down here, hits 1.146. That would be the 5th wave move for it. If we look at yesterday, this was a blowout day, but not tradable just because we have this right here because it came up, hit the 1.146. Let me show you here real quick. See, there's the 1.146 and then 1.414, hit it, go hit that, so took it away, took that out. So it is a blowout day, obviously, big in the market, but just not, since it came up and hit the 1.146, it's not trade. And going to the 4-hour chart, just like the Dow Jones, price was extremely overbought, and then we have the sell-off. This is one thing I was looking at, seeing where the line would be, if this would be the trend. I'm not sure if this is accurate or not for it. I just drew it off the top of these points. Went down there. I mean, it may be something more like, I'm not sure why these are on here. It may be more something like that and that, and then we just busted up here to the upside. And now we're having the correction back down into the trend channel right here. So it could be something like that. And actually that looks pretty good for it. So it could be, for moving forward, what we're looking for is two things are going to happen. Either A, you see how we busted up here on the upside, overshot it. We'll go down here and bust it down here to the downside, meaning we'll get a whole lot more sell-off before it settles out. Or this is the beginning of a consolidation period, starting like maybe something probably like that, something like that, I'd say. Let's see, maybe something like that, or part of a consolidation period. So we'll just have to wait and see what's going to show here for it. That's kind of like the least of my concerns. What I look for is something just to look at. Going down to the Russell 2000, there you can see those are the rules I have for the blowout trade. For our chart, never quite hit being overbought over here, but obviously like the other two, we've had the sell-off in the market. And we actually had one the other day that we didn't have, an S&P 500 or the Dow Jones. You can see right there we didn't have it. There we didn't have it the other day, but we did have it in the Russell 2000. So starting off over here for the Russell 2000, I think this one was not a, yeah, because that one would have gotten hit right there. So we can see real quick if this is going to be a potential blowout trade right there. And if price comes and hits the 38% retracement, it's not one. So let's see here. Nope. Nope. Okay. Cool. So we do have a potential blowout trade right here for the Russell 2000. I'll just draw this little box to signify that's the level we're looking for right there. So we do have the potential trade for that right here. See, price had hit the 1.146, and we did have a pop up, but what we look for is we look for a retracement using the previous day's high up to the 38% line. And as you can see right there, there's the line after price hit the 1.146. It did not go and hit it. And now price has hit the 1.414 down here and has actually used that as pretty close enough for it to consider it being hit. So if we, tomorrow, what we're going to look for is, like I said from the other day, is we're going to look for another push lower at least tomorrow. And what leaks look for it to come down to 1871.3. But we'll look for more of a little bit push. And there's still 30 minutes left, so maybe the market gets that push here, and we just got to keep on waiting for it to continue to draw it lower. But we will look for, at least when the market opens tomorrow, or I guess today in the evening session, going into tomorrow, for more of a push down here in the Russell 2000. And the level I'll be looking to get in, the earliest would be 1871.3. But probably what I'll do is just wait until I wake up tomorrow morning, and hopefully we get more of that push down to somewhere around here, and I can get in at a really nice level for it. And then the exit would be, you know, anywhere up to this point right up here, that blue line right there. And so I'll just draw these here real quick. So at least for the Russell 2000, we are looking for at least a little bit, at minimum, some more downside to around this area. Of course, price could continue to go lower than that, which can happen. But this would be the earliest level, 1871.3, that I'd look to get in, and then the exit would be anywhere up until this blue line, which is about at 1887.3 for that one. So out of those other three right now, only the Russell is looking like it's going to head for sure. Going to head, I say for sure, but looking like it's going to head lower right now as far as any trade, as far as the blowout trade goes. And last but not least, going over to oil. So oil has had a huge move down today, up here at 80.93. Down to about 77.38, and that kind of goes in line with what I was looking for in the overall market, the longer term market. I'm looking for price for oil come back down to about 65.25. I did an oil video in the video section, obviously the video section, discussing why I think the price will go down to that 65 level for the trade that I am looking for that. So still looking for more long-term downside in the oil market. But going over here to the 5-minute chart for oil, we can see, is this going to be considered a blowout day down here to the downside using the high for the previous day and the low for the previous day? Yes. So oil is in a blowout trade as well. Even though it started up here going up to the upside, it went all the way, and actually look how this went today. It hit right off the 1.146 right here, and went all the way down to right there, and now down to the 1.414. So the exit we're looking for is the 1.146. Now this is another trade I will be looking at getting into tomorrow, assuming that high holds and that low holds by the end of the closing day. Earliest I'd be looking to get in would be about $76.49, and that's almost $1 away from it where it is today. So I think going into tomorrow, oil still has more downside left, and of course it can go lower than that, but that'd be the others I'd be looking at getting into it. So from this trade, oil I think has at least another $1 lower in it, and potentially more. Going to the 4-hour chart, middle no man's land, so it's no help. 15-minute chart, you can see it's been completely oversold, which is obviously today, and so we'll see what happens. This is more just like a short-term turnaround. It doesn't necessarily mean price is going to turn on a dime for sure. The longer the charts go, the time frame, the more accurate it is for it. Let's see the weekly, nothing there, because as you see, like in the 15-minute chart, you can see price went up over bought right here and continue to go up a little bit higher before we got a little bit of a sell-off down in there. So it's just the 15-minute chart shows what could be a potential turnaround based upon the MFI, but the 4-hour isn't confirming with it, and I don't really use it for the 5-hour charts. There's too many false signals with it. So I think we'll get a little pop-up right here in oil, which obviously has already happened between now and the end of the day. Hopefully it doesn't go up to $78.03 to complete that trade, and I hope that pop-up continues just a little bit higher to get some more long contracts in there, and then we can sell off some more down to at least $76.49, where I'd be looking to get in right there, and then ride it up to the potential profit target around $78.03. So the two setups we have right now, well, this is daily chart, but it's going to be the same thing for the 5-minute chart right here. We'll just go into it. Or that was a continuous contract chart. See, there's the 5-minute chart. Draw that. And there we go. Let's see if the 1-hour, 4-hour are different. No, it's the same. Yeah. So that's what we're looking for. I'm looking for, let's go ahead and put this on. There's today's high, and there's today's current low right there. This one's going to be a little bit different because that last one right here is the continuous contract. This is the monthly contract that I trade off of. So I take that back. I'm looking at the potential profit target being $77.98. But I'm looking for it, if this doesn't go up and get hit first, I'm looking for tomorrow to go down even lower, another $1 at this point, down to about $76.50. So right now, oil and the Russell 2000 are the two hot ones right now, and they're starting to get a little pop up. Hopefully that will subside here in a little bit, and the push lower will continue down to tomorrow, so I can look to get into those. So anyways, that's all for today. Thanks. Bye.